Hey everyone, let's get right into it. We have been playing ping pong between these two levels, 31k and 29k. An opportunity to make a decent play, especially momentum play, is coming up in the crypto market if you're paying attention to the right things. Now, we've got four key levels that are by far the most important as far as I'm concerned. Before looking at those levels and how to trade them, let's refresh our understanding of the current market structure. And there's some things I like, some things I don't like about what I'm seeing. So if we historically take a look at the chart, normally we don't like to see a high like this get formed in an uptrend, price to come down, bounce up, go just above the high, and then crash right down afterwards and progress to go down. See, this is just classically what happens as a trend weakens. I mean, if you look previously, structural level to structural level, they're pretty much straight lines up, really strong, aggressive uptrend. And then if we take a look here at the recent uptrend, which we've had throughout the entirety of this year, there's been a really nice jump from each high. And now we might be about to see a really ugly move over here where we've made a top only just above this level here, and we may lose this key level here, resulting in a breakdown, which could very feasibly just result in us going down, testing lows either here, just above 20k, down to around 20k. And then if this doesn't hold, we're looking at our next test, which will be this region here that we previously had. And then if that also doesn't hold, we'll be looking way back at this support over here around 12k. Now, this won't be huge cause to concern because, well, at 12k, we've got ourselves a beautiful buying opportunity for the long term. But we can worry about that in the future. For now, I just want to lay the bearish scenario, which is very realistic, and it's a coin toss right now as to which direction we're going to go. So when it's a coin toss, how do we make money? Let's come down to the 1 day, take a look at our key levels. This level here for breakdown, this level there, 31k, 0.3 for break up. How do we form these two levels? Well, we had our previous range before this formed. And if I go back to the replay level, let's take a look. So these are ranging market conditions. Over here, we got 25k at the lower end, key structural level. That's really when the market flipped into a proper uptrend. It was tested and the price actually bounced really nicely off of it. Then we had key psychological level at around 30k for the next resistance with one little deviation over there. And this is where price was ranging. Lots of data points there, and we've got our key structural level here. Price was going between these two levels, and then I also really liked this 27.2k level because we've got several data points showing it's a support there, several over there, and then here we can see a clear flip when price goes below it. Small deviation above, straight back down, retest again. You can see the level is very clearly respected, and this breakout here was actually triggered by the 27.2k breaking, and price went up afterwards. I often have people ask, how do you select these levels when there are so many potential levels you can choose from? You could have set a support here and it makes sense. I mean, look, you've got support there, support there. You could set one here. You can argue some supports there, some supports there. You can set a little bit of a support over here as well at 26.6k. Multiple wicks hit over there. We've got multiple levels there. It was disrespected here a little bit. Price went back up, failed to break there. And then we got a small breakout after it. Then also, why aren't we looking at the 24k over here? And why don't we have the 21.5k marked out as well? All of these are viable levels. The problem is this is a useless chart to trade. And while all of these are viable levels, they don't need to be looked at all times. I only want to look at levels that are going to be relevant to my decision-making process. And at every point, these levels have been very relevant to my decision-making process. In sideways market conditions, I like to look for three key levels. What is the upper part of my range? The level I think is most likely to cause a breakout if we get above it. And then the bottom of my range, what is the level most likely to cause a breakdown if we get below it? And then also there is the midpoint of the range. Now, this isn't always exactly at 0.5. I like to adjust it a little bit based on best fit of the data and the reactions I see at different price points. So while we can mark out a lot of levels, these are the most important levels before I enter a position. Once I do enter a position, I start to look at other levels and how they may affect it. For example, we can delete this temporarily. While we were here, I was only looking at these 3 levels, but I'm also very conscious that we have a high here. And this high is a potential trouble area for me, because I know when we break out of a range, if we have some sort of deviation, sometimes it's a confirmed deviation, price does nothing but just melt through it. Other times it can be a bit of a resistance and we can see some reactions there. So price broke out, hit this area, and it caused a bit of trouble. And right now we're consolidating just above the top of this range, waiting for a potential breakout or breakdown. Of course, I'm hoping for a breakout. And if we go to the 4-hour, we can see exactly how to play this. So the first thing we do is previously we're looking at the 31K. I can now get rid of that and solidify about 31.3K over here, as this better fits the data. One of the best ways to avoid getting trapped when we're consolidating, waiting for a breakup or breakdown, is adjusting your levels to better fit the data once you get more than 1 point. See, in the previous range, there was just 1 point here. I can view that as an isolated deviation and set a soft level to watch. However, here, this is no longer an isolated deviation, about 31.3K. We've got 1, 2, 3 points supporting it and an isolated wick over here telling us to pay attention to this level as well. So the nearest play to us, which I won't take over the weekend if we get it, simply because I don't trade on Saturdays and Sundays, is this over here. If price breaks down below this level, we'll probably make movements towards this 27.2K. There's a few potential trouble areas we can hit, but I'll deal with that in my trade management. My main target, the one I'm hoping to hit, will be about 27.2K if we get below this level. What'll most likely happen then is we now enter an expanded range. This breakout failed. We hit resistance at about 31K. I bring this level down to exactly 31K. And now we'd be looking at an expanded range between these 2 levels, alongside a short-term downtrend with the price heading towards here, then potentially continues and we get another breakout there, or we just bounce between these levels, maybe make another attempt at 31K. I will be reasonably bearish if this fails. As I explained before, I really don't like seeing a high, slightly higher high tested like that after an uptrend. I mean, just look at this. Huge uptrend, high, slightly higher high. We came down here, exploded back up to it. I don't believe in fractals, but I do believe market psychology is very similar in general. We're looking at a very similar thing over here. It's one of the biggest bias shifts for me because psychologically, think about it. We've got a bunch of participants that have been holding money at this high. Like a lot of people bought over here. And now these people held the whole way down, believing in the price. Then it came up, went just above. They probably didn't sell. New people bought as well. Now we're going back down again, straight for an extended period of time. That's a great way to shake out weekends. That's the downside play, which I hope we don't see. But as far as my trading goes, I don't care. I'm just trading what I am given, not what I want to happen. So if I am given a move back up, a breakout from this level, I'm going to be targeting very aggressively towards the 36K level because we've got no near resistance. We'll have to zoom back out to the 1 day to get any idea where price could go. And then the most likely level I see is around 36K over here. In fact, you can see it better on the 1 week. Zoom out, come here. You can see 36K seems to be the best fit after we break out from this level, acted as a support over here, somewhat of a resistance with slight deviations over there. It's not a perfect level by any means. I really like this high here as a much more powerful level, but there's no chance I think that price explodes straight up to 47.5K without hitting some sort of resistance. And the best fit for the data that I can see is 36K over here, and then there's also 40K psychological level, which is very possible after that. And that's the full market update. Good luck with your trading.